Hello everyone, my name is Lachlan. I write for Money Morning and I'm also an analyst on Exponential Stock Investor. Now today I'm going to talk a bit about the tech sell-off in the US, which has hurt the S&P and the NASDAQ. Major stocks like Apple, Microsoft, Amazon, and especially Tesla have sold off of late after an immense run-up. I'm going to talk about the impact this has on a couple ASX tech ETFs. So the first thing I've got for you is the Tesla chart. It's posted 3 losing sessions there. And if you put an RSI indicator on this, you could probably assume that it is overbought. So I'll just do that now. So I'll chuck in an RSI. I don't put much particular weight on an RSI reading, but you can see here that it crept into overbought territory. And it's just one indicator you can use. But what I'm going to do now is look at the NASDAQ 100, which you can see here. So it's had an immense run. It's really impacted the S&P. There's a lot of major tech companies out there that are doing quite well as the world entered lockdown, and they play a dominant role in our lives. So it kind of makes sense. And in today's article, I talk a bit about a couple reasons for optimism. And I think this stems from the potential for US stimulus to get over the line, as well as it just goes to show the power of the money printer. The US Federal Reserve continues to buy mortgage bonds, and on top of that, a vaccine may be released by the end of the year. And there are a number of indicators out there that economies are slowly starting to recover. So it might not all be bad news, and this could just be the case that people are taking a bit of money off the table before the election, and we'll see how that plays out. But for that reason, you've got a large red bar here for the NASDAQ. And there's a particular NASDAQ ASX ETF called NDQ. You can see their weightings here. So they're heavily weighted towards Apple, Amazon, and Microsoft. And they've also got companies like Tesla, Adobe, Nvidia, PayPal in there. So you can see what's happening with NDQ here. So back in July, I said that NDQ might have had up to 15% to run in the medium term. And I've just drawn a little box here, and it wound up going about 12% higher during that period. So we'll wait to see if things change, but I'm hesitant to say this is the beginning of the end for the market, purely because of the potential for stimulus to increase from here on out. And then there's also the ATEC ETF, which is from BetaShares as well. It's heavily weighted towards Afterpay and Xero and also Seek. So that's one ETF out there if you're interested in Australian tech stocks. And I'll just show you what's happening on the chart for ATEC. So it came out in March, and then the market sold off, but it has since recovered strongly, and it's moved down in the last 2 sessions. So that could be led by the US tech sell-off. Frequently, the US market determines movements on the ASX, and I think that's the case today. So I'd encourage you to read that article and learn more about Exponential Stock Investor in the video description below. They're both great resources. And yeah, I just think the market might still have another leg up before a sell-off come the time of the election. That's just what I think. You should always be aware of the risks. But for the moment, I think that the bears will have to wait, and the pessimism might not be justified just yet. So I hope you have a safe weekend, and I'll talk to you soon. Thank you.